Hi, it's Mary Dias. On this snowy day, we're going to talk a little bit about real estate buying guide. I have a document that's a buyer guide, but I figured a video might be a little easier to kind of snap through and be able to get the details that you need. If you're just going out on your buying journey, Southern Indiana has a lot of great features, historic towns, suburban areas, a lot to offer in the area. So what I'm going to do is give you kind of some tidbits of understanding the Indiana market. The real estate landscape is very diverse. It offers a lot of modern suburban homes. It has some historic homes. It's got some lakefront property. So it's got the whole gamut of what's out there and available. So it's a great area to be able to look for homes, and they're reasonably priced in consideration for the rest of the United States and where the market's going. Some of the key counties and communities is Floyd County, which is New Albany, Georgetown, Floyd Knobs, etc. It's got a revitalized downtown, excellent schools, easy commute to Louisville. So those that want to live in Indiana and commute to Louisville downtown, this is a popular area. Clark County has Jeffersonville, Sellersburg, Charlestown, and it's got rapid growth, new subdivisions popping up, a lot of retail centers. There's riverfront development down by the river, ideal for buyers seeking modern amenities and strong job market. And then there's Harrison County, which is a little more on the outskirts, Corydon, Lansville, other rural tranquility for those people that are looking for the historic charm or larger properties, and more of the outdoor. It's perfect for those seeking space and privacy. So the market trends for our area, Floyd, Clark, and Harrison County, is there is steady appreciation for home values. They've risen consistently due to limited inventory and strong demand. It's got a balanced market. While it's competitive, Southern Indianas are more affordable than the metropolitan areas and even our friends in Louisville, Kentucky. It's got rural appeal because there's properties with acreage, you got outdoor space, you have the ability to have home offices, and it still has some historic if you're interested in that. So that's kind of the area in a nutshell. So when you're starting out in that buying journey, you need to make sure and set a budget. Establishing a clear budget is the foundation for a successful home purchase. If you don't know what you have to spend, you potentially could overspend or get into a mortgage that you really can't afford. So evaluate your finances, review your income, what debt you have, what savings you have, and what would be a comfortable payment. It's critical to get pre-approved in this market because houses do go quickly. When you put an offer in, you want to make sure that you have the financing backing when you're going in. It's makes for a much better offer and a smoother transition, excuse me, through that closing process. You need to make sure that you talk to a mortgage company. You can talk to a few of them. There's mortgages out there that have some financing available and some incentives that are great for the buyer. So, excuse me. Well, the next thing you want to do is make sure you know all of the costs. That includes what are the property taxes, and what are the discounts available. Indiana still has the homestead for the next 5 years, then it'll be transitioning out. Know what the homeowner's insurance is, shop around, give them an idea where the property is and what the features of the property are, understanding what maintenance items are, how old are the items that are in the house that are big ticket items. Do you have enough saved to be able to cover those costs for repairs or replacement? And know the replacement time frame of those big items, your appliances, your HVAC, the roof. Those things are all critical. And then also knowing what the utilities are. What's the average utilities for the house that you're looking at? You can ask that of the current seller. If it's a flip property, etc., they may not know. So some average prices for 2026 in Floyd County, the median home price is $275,000. Clark County is $260,000, and then Harrison County is $230,000 because it's more of the rural area. The next item is financing options. You need to know what's out there for financing. Can you do a conventional loan? Conventional loans require 20% down. So you got a 20% down payment or more. Then your conventional loan may be ideal. They have some down payments as low as 5%, but the traditional conventional loans is 20% down. Then there's FHA loans suitable for your first home buyers with low credit scores or maybe smaller or little down payments. They have those down to 3% down. VA loans, if you are an eligible veteran, active duty member, they have those programs with no down payment. You have to meet the qualifications, and the property needs to meet higher standards of appraisal. And then the USDA loans are those designed for rural buyers, offering low interest rate and zero down payment options if it's a HUD approved property. So choosing the right location, that's always a key element. You need to drive around the area, know what areas maybe appeal to you. You like Jeffersonville, you like New Albany, you like Sellersburg, you like Cordon. You need to go and look at some of those areas to get comfortable, to know the right location for you, depending on your lifestyle, your work, and what are your long-term goals. Some of the factors to consider is your commute. We have proximity to I-64 and I-65 to travel to Louisville or Indianapolis, just to get around the New Albany area. School districts, high-performing districts such as New Albany, Floyd County, and Greater Clark County enhance property value as well. So knowing what school district, if that's an important item for your family. The amenities, are there parks nearby, shopping, what are the things you like to do, what restaurants, etc. Knowing that information about the community. And then what's the planned development? Are there infrastructure projects? Is there a big highway going through? Is there going to be an expansion? Is there going to be a roundabout? They love those roundabouts. So that can also influence the property appreciation. So you need to be familiar with those items. And then your preference of, either rural or suburban or urban convenience of downtown Jeffersonville or New Albany with walkable towns and cultural attractions. It's easy to get around, or the suburban comfort of Sellersburg or maybe Georgetown with, family-friendly neighborhoods and modern amenities. So once you kind of nail those things down, then you need to have a real estate agent that's knowledgeable. Going through some of the things that I just went through, it was really important to be able to feel comfortable that they're going to be able to help you navigate this, probably one of the biggest transactions you're going to do in your lifetime, or you might do multiple of them. So benefit of hiring a local agent is the access to market listings and potentially some off-market listings, having neighborhood insights, local zoning, property taxes, and school districts, skilled negotiation for that contract. Once you get to the down and dirty of the contract, making sure you have all of the nuts and bolts of the contract and making sure it's a compliant contract, you within the legal ramifications of the real estate laws in Indiana. And then working through inspections, I was a recommendation to get an inspection so you know what it is you're getting into. And then appraisals, if it's finance, the finance company is who's going to do that appraisal and then get you to the closing table and through those final steps. So you want to make sure you choose the right agent. You can always, of course, call me. If it's in one of those areas that I serve, I'd be happy to help you navigate this journey. You need to make sure that you can communicate with them, that they're responsive to You have a dialogue with them about, do you prefer text? Do you prefer email? Do you prefer a phone call? Those are the things that are going to be what makes the right agent for you. And so now that you've got a pre-approval, you've got your agent, you can start looking at what those home searches are and maybe find some properties that kind of meet your budget and lifestyle, and hey, this is what I like. And then the real estate agent can set up a home search with those criteria. I gotta have a 2-car garage. I gotta have a 3-car garage. Those elements can be fine-tuned into the home search so that you're getting the best match to what you really want, and then making that list of what you really have to have and what you want. And again, must-haves versus wants are different, and understanding that going in, are you going to be able to live with the fact that you're not going to have a 3-car garage? You're not going to have 2 bathrooms. There's only going to be 1 bathroom. Those are the key elements to kind of go through with your agent and make sure that everybody's on the same page, so that your time is spent well and you're finding properties that meet your needs. So then you actually are at a home search. And some of the things that you really want to look at is check the foundation, the roof, the major appliances, to know what their lifespan is, so you know exactly what time frame and what costs could come up down the road. Energy efficiency, review what kind of insulation they have. If it was 20 years ago, may not be where you would want it to be today to be the most efficient. Windows, are they double pane windows? Are they those old casement type windows? And what's the HVAC's performance? So those things are elements that I put on a little checklist as we go through properties with that buyer, so they have a good understanding and are getting all the information they need to make the best choice. Then the neighborhood, walk around a little bit, observe what's the traffic like, what's the noise like, what's the community upkeep, are the grasses mowed, those kind of things. If they matter to you. Do a walk around, do some driving around to this neighborhood and make sure. And then consider the long-term value. Is this going to be your forever house? Is this going to be a 5-6 year house? And consider the long-term value and marketability down the road. So once you've had those, selected a few properties and you want to go through those search, and then those property alerts can come to you, so you can reach out to your agent and say, I want to go see these. I really think these make good sense. And then once you've selected the property, you're at the point of making an offer. The right property, a strong offer can make a difference in a competitive. So offer components are, of course, the price. What's it listed at? You need to get comparables to what's sold in the past, what's currently on the market, and what are the market conditions. Seller market, buyer's market makes a difference if you're going to go more towards the purchase price, or you might be going under the purchase price. And then contingencies. If there's a finance contingency, you got to have a mortgage, you got to have a finance contingency. Inspection and appraisals to make sure that the home is appraised for the value that the loan is, so that it covers it. Earnest money deposit, understanding a strong commitment that you want to buy this. Your earnest money deposit is going to be that dollar value that's going to say, I'm putting this offer in, I'm giving you a $1,000 deposit in good faith. And that's usually around 1% of the sales price, but that's always something that's negotiable. And then the closing timeline. Can you close in 30 days, 45 days? Need to find out from your mortgage company what's their usual time frame to close up and meet those time frames. So stay flexible on closing dates and minor repairs. Those are key elements that come up. Avoid emotional decisions. Rely on the market data to make some decisions. and work closely with the agent to craft a compelling offer to be able to get that offer accepted. Use their experience to be able to guide you on what makes the most sense. The inspection, of course, you need a licensed inspector to be able to go through the property. Those are paid out of pocket by the buyer. And the key elements there are making sure there's no, what are there foundation cracks or water damage or electrical, plumbing deficiencies, roof, HVAC, age, performance. Need to know what those are and what's there. Mold or lead-based paint. Those are all elements that are items that are brought up in a home inspection. You may be able to see them when you're walking in, but those are the elements that are the inspection. So it's also good. You get a whole inspection report of everything about the house. You know where things are after you close, and the water shutoffs, all of those nitty little things that you may not think of in the home buying. Then you get to the appraisal. The lender orders that appraisal to confirm the property's market value. If the appraisal is lower than the offer, there's renegotiation, potential additional down payments that are going to be required to be able to meet the conditions of the contract. If the appraisal is higher, well, then you have equity going in, which is always a good thing. So then you get to closing the deal, the final process of the transaction and transfer of ownership. You review, sign all loan documents at the closing table. You usually do a final walkthrough before the closing to ensure that the property is in the same or better condition than when you first put that contract out there. And then you pay the closing costs, typically 2 to 5% of the purchase price, depending on your loan and what it costs to acquire that loan. And then you receive the deed and the keys, and you are now happy homeowners. So some of the common closing costs, title insurance, and that protects you from any debts or liens that have been put against the property prior ownership as you're coming in. Appraisals and inspection fees are common costs. Recording and attorney fees, which are de minimis, but nonetheless, you still want to account for them. And the loan origination fee is usually about 1% of the total loan amount. So after closing, and now you have some things to protect your investment, you want to update your address, apply for the property tax discounts, the homestead deduction in Indiana, schedule regular maintenance for your HVAC, your roof, landscaping, that kind of thing, and then your homeowner's coverage to make sure that it is reviewed annually. Again, you can shop around to make sure that it is covered and you're getting the best bang for your buck. Some of the long-term plans after the home purchase is potential for refinancing or preparing to resell and maybe get something bigger, or you're going to upgrade. So you need to look at, what have I put into it? What is the appeal? And I have a whole seller's guide that I will be diving into that you might want to listen to as well. So in conclusion, that's kind of the process as you're going through for home buying. That's a lot, but I do have it documented, so you have it in readable format if you want. Just reach out to me at mdiasrealty@gmail.com, or my website is mdiasrealty.com, and it's MDIAS realty.com. Or you can just shoot me a text, 703-517-9109. Thanks for listening. Have a great day. Stay warm.